All right, it is Sunday, November 2nd, and this is the second week of the challenge that I'm doing, where I have deposited $1,000 into a Roth IRA account on Robinhood, and they offered a 3% match bonus, which gave me $30. And I did one trade in GDX where my risk was about $25 and I showed a profit of about $23. And the plan is to grow the account without risking from the original $1,000 deposit. So I need to explain what I mean by risk. So let's look at this generic example. Suppose that I bought a stock for $100, and I was willing to stay in and hold the stock as long as the price stayed above $95. But if the price drops to $95, then I will sell and exit. So that means that I'm risking $5. So that's what I mean by saying that I will not be risking from the original $1,000 deposit. It means my risk in the trade will not exceed the $30. Now there is some hidden risk that can't be as easily planned for. There is a risk of gap down where the price doesn't smoothly go down to 95. Maybe it just suddenly drops to 90 and you never get a chance to sell at 95, in which case you would lose more than your planned risk. But for my definition of risk, I'll just be talking about the planned risk on selling at a predetermined stop loss price. And when I do a trade, I'll be dividing the shares into 3 roughly equal pieces. So for example, suppose I bought 3 shares at $100, and the entry cost that would make it $300. And I'm risking $5 per share, so that would be a total risk of $15. Then my plan is, if the price goes up to 2 times my risk at $110, then I will sell 1/3 of my shares. So I'll sell 1 share at $110, and that would allow me to take in a profit of $10, which now reduces my risk from $15 to $5. So that's the purpose of selling. Once you reach the 2R point, you can lock in profit and reduce your risk in the trade. And then another way that I can further reduce risk after I sell at the 2R point is that I could move my stop up to break even, so to the point where I entered, and then that would eliminate the final $5 of risk. And so now I would have 2 shares that are riding in this trade risk-free. And so that's sort of the guiding philosophy, and I'll have sell rules for the trade that are predetermined. So let's jump into the second trade that I executed in this account. This is XLU, the utilities sector ETF. So here I have the chart, I entered on October 23rd. And so what had been going on with this stock is that it was in an uptrend. It was trending above the 21 EMA. I should explain what these lines are. This dotted yellow line is the 5-day moving average exponential. The light blue line is the 21-day average, and the dark blue line is the 89 moving average. So if your price is trending above the moving averages, then it means you're in an uptrend. And so it's in a pretty strong uptrend and got a little overextended and started to pull back. And on October 23rd, it had pulled back all the way to the 21 EMA intraday. And I'd like to look at what this looks like on an intraday chart. I like to use the 78-minute chart because it divides the day into 5 equal pieces. And here's what it looked like at that time. It was bouncing on the 89. And so when I saw this, these two green candles, that was enough of a confirmed potential bounce for me to enter, and I felt like I could enter with very small risk because I would just set my stop loss at the low of this pullback right here, and the low was at 89.84. And I set my stop at 89.81, just a couple of cents below that. And my entry price was $90.49. So if we get our calculator out here, just do some simple math. 90.49 is my entry point, and I'll stop out if it goes down to 89.81. So I'm risking 68 cents per share. And let me see, I don't remember how many shares I bought. So let me check here. So I bought 11 shares at 68 cents risk, so times 11. So I had a total risk in the trade of only $7.48, and my amount invested would be 90.49 times 11 shares. So I'm investing $995.39, but my risk in the trade is only about $7.50. So that's why I liked this entry, is because it provided a very low risk entry point. And I went ahead and I marked off where this first purple line is 1 times risk, and the second purple line is 2 times risk. So I will be looking to sell if we get up to this second purple line, which is at 91.85. And what I ended up doing is I set my stop loss for 2/3 of the shares down here, and I set a sell limit order so that if price does go up to 91.85, it will trigger a sell of 1/3 of my shares. That's something that I didn't do in the GDX trade, and the reason is I'm not going to be able to be watching this all the time. So if it does go up, then I do want it to go ahead and sell. Then if something goes wrong and my stop loss gets triggered, I'll get a notification on my phone, and if I need to sell that other 1/3 of shares that wasn't protected, then I can do that pretty quickly. So that's what's going on there. And so let's go back to the daily chart and see what happened. I'm going to go ahead and zoom in a little bit here. And so the next day, price did go up. And you can see the high was 91.84, which is exactly 1 cent below where my sell limit order was. So it didn't get triggered. So I just let it run, and then the next day it went up a little bit. And actually, it's not showing. My drawing is not showing on here where there it is. Okay, there. So that's what I missed on the previous day. So if you look at the high of the day, it got up to 91.73. Remember, we were trying to get to 91.85, but my my sell limit order actually executed after hours that day. In the after hours market, the price went up higher, and I sold either 3 or 4 shares, because I started with 11, so approximately 1/3. And so I did get that to execute. If it hadn't, it would have. If it was only set for market hours, it looks like it would have still triggered the next day. But then the price really fell quite a bit that day. It went below my entry point. And one of my exit rules was, if this BX trender down here, these light green and dark green bars that you see, if it turned dark green, then that would also trigger a sell of another 1/3 of the shares. Let me tell you a little bit about this BX trender, what it is. Basically, it's measuring the play between this 21-day exponential moving average and the 89-day moving average. When they are expanding away from each other, that's means you have upward pressure on the stock. And when they are moving closer together, then there's downward pressure. And so when this turns from bright green to dark green here, it just means that this 21 and 89 are inching a little bit closer together now, instead of continuing their expansion. And so it's a momentum indicator. You can think about light green as meaning that it's getting more greedy, and dark green meaning that it's getting less greedy. So it turned dark green, and so I sold here at the close of the day for 90.07, which was just below my entry point, but not all the way down to my stop loss. And I considered selling the whole the rest of my shares, since this was such a bad candle where it just dropped all day. But since it didn't trigger my stop, I left it on. There's some risk that it could gap down below my stop the next day, but I decided to leave it on just in case it wanted to go, and it hadn't reached my planned stop point. But then the next day it did go down, and it tagged the stop out point almost perfectly, and I exited the trade. So let's look at the numbers and see how they look. So I started by buying 11 shares on October 24th, and that was for $995.39. On October 27th, in the after hours, I sold 3 shares at 2R for a profit of $4.08. Then the next day, on the 28th, I sold 4 shares at 90.07 for a loss of $1.68. And then on the next day, I sold the remaining 4 shares at 89.81, which was my original stop, and that was for a loss of $2.72. And so the total loss in the trade was 32 cents on a $995 investment. So that's a loss of 0.03%. Remember, my original risk in the trade was $7.48. And so it brought my account value down to $1,053.42. So basically a break-even trade. And let me show you something else that we have here. I wanted to have like an equity curve going here. So I have this spreadsheet and this graph over here. The blue line is my account balance, my realized account balance. So for example, we started at 1,000, we got the $30 added on, gave us 1,030. Then on this date I had sold, and that increased my account. So every time there's a transaction where I sell shares, then that gets put into the account size here. And I want to one metric that you can use to see how you're doing is to compare yourself to the S&P 500, or so I'm using the SPY, and so I have the closing price of the SPY for each of those days since I've started this experiment. And what I'm gonna do is compare it to how am I doing compared to if I had taken my $1,000 and just bought SPY buy and hold. So I'm not buying $1,030 worth, so I'm allowing myself to count this $30 as profit, but I'm not counting the $30 on my SPY buy and hold. It's just the way I decided to do it. And so I've got this graph. This is all the way up to this is current. I haven't started a new trade yet. But I do want to look at the charts. Let me go to current day. I do want to continue watching XLU. You can see it has collapsed even further, so it's good that I did have my stop hit when it did, and I didn't have to go through this gap down that happened. But I do think XLU is still a good investment, and I'll be looking for re-entry. And if we put on I put on the 34 moving average and the 55 moving average. So it has fallen down to the 34. It would be perfectly normal and natural for this to come all the way down to the 55 before it starts recovering. And then I might be looking for entry if it starts to climb back above the 21 again. But actually, I was thinking I might not do XLU, but there's another utilities ETF called UTES, UTES, and it's behaves somewhat similarly to XLU. You can see some similarities in the chart, but so I'll be watching both of those. This one looks a little stronger. It didn't have as severe of a gap down. And from my understanding, the mix of stocks that are in this ETF are a little more AI adjacent than the more general XLU ETF. So I'll be watching this. I'm also still interested in GDX. I think it's... I don't think its move is done. I've got this chart pretty cluttered here with all these. I'll eventually delete these. But here's what happened to GDX since we exited. I believe we exited on this candle on October 21st. And so you can see it spent some time. It came all the way down to the 55. And it looks like it has found support here at the 55. So I will be watching if this jumps back above the 21 EMA and I can find a low risk entry. I may be interested in getting back in and doing another trade in GDX. If you look down here at the BX Trender, it has turned red, so I would definitely like to see this turn back to green. That might be a good signal to look for entry, is once this BX, remember that's measuring the play between the 21 and the 89. So once this 21 starts to separate a little from the 89 again, it'll turn green, and that would be a good entry. So I'm still interested in both of those, in both the utility sector play and the GDX. Also, I've also thought maybe instead of the gold miners ETF, I could just do GLD, which is the Spider Gold Shares investment trust, is what TradingView is calling it. But it basically is it's basically gold instead of gold miners. And so if we look at this chart, it's a little bit stronger. It's getting closer to recovering this 21 EMA. So I'll be in the BX is dark green. I'll be watching GLD and GDX for possible entries. So that's kind of my plan this week, is looking at those, and I may find another one that I'm interested in, but I haven't seen a good entry for, is XLV, the healthcare sector. So it just kind of dipped below the 21 for a bit and reclaimed it. But the thing I don't like about this is this BX is still very high at a score of 33. So, but I'm keeping an eye on this XLV also for a possible entry. Okay, so I guess that wraps it up. So the count kind of stayed even. We're at $1,053.42, and I'll update again next week, regardless if I've put on a new trade or not, or fully exited it or not. I'll be doing an update again next week.